All right, 1 minute, guys, and we will go ahead and begin, inshallah. All right, guys. Again, assalamu alaikum and bismillah. Thank you guys all for joining on a Saturday to this webinar. Hopefully, we will make it educational and valuable to you guys. So, the question and the subject today that we're going to be talking about is your $3 million portfolio really halal? And this is, this resonates extremely well for high income professionals, physicians, business owners, and so on and so forth. And, we're going to get a little bit into it. Today, we're not talking about replacing traditional investing. One second, guys. Let me make sure I got it right. All right. So today, we're not talking about replacing traditional investing. It's truly about asking deeper questions, right? What actually creates halal clarity? Are the public markets the only place to invest safely? Hopefully, by the end of this presentation, we'll be able to at least understand the basics to answering both of these questions. Brother Fasi, if you want to quickly talk about these labels that we have
Yes.
here, SpaceX, Meta, so on and so forth.
Yeah. So, uh, quickly talking about the public markets, we know that there's a lot of scanners that allow you to see whether a company is halal or not. They keep changing that as well, depending upon how their debt ratios change. So some of the companies that we want to mention about today is like SpaceX, Meta, Microsoft, Oracle, mostly tech stocks. I think that's where most of the people invest in. And then obviously sometimes depending upon how the markets are, but at least from a tax compliance aspect, like Lockheed Martin comes into name as well. A lot of us think that, yes, it is a compliance tag, it receives it, but do we really know what these companies are doing? Who are the decision makers, and what do they really talk about? Nabil, are you maybe
Guys, I don't know what's going on. Okay, there we go. No, okay.
something? Um, a lot of these talks, really are brought into through IPOs. Again, the whole idea is to basically get an evaluation, and hopefully make money to the founders and the people who are the decision makers there, and then they end up doing things that may not be in alignment with what your ethics are. And so this is a really question that we need to ask: is are we really investing something that's halal, or is it just a tag that we're looking for to make it compliant? What are these companies doing, who they're investing with, and what they're doing is totally out of our control.
And just to like give you guys an example of a company like Boeing, right? This is a company that creates, different products and, like, for example, selling equipment to countries like Israel. It's not about whether we're supporting it or not, but as our investment dollars are going into this, does it truly align with what it is that we're looking to do? That's the question that we need to ask ourselves, and that I'm sure some of you guys have already asked yourself. Now, some of you guys already know me, some of you guys have not met me. I want to quickly introduce myself. I am a Detroit born real estate operator. I'm a broker and founder of the Fajr Fund ecosystem. I currently manage over $15 million in property. Amin Realty has done $1 billion in lifetime sales between 2017 and now. And what we specialize in is having the full vertical. So, not just finding our investors deals and helping them purchase, but rehabbing, leasing, the day to day operations that's needed with any real estate investment. Some of our core philosophies mentioned here, on the screen for you guys to see. We really focus on disciplined investing, income producing assets, long-term thinking, and I'm sure as you guys can understand with how we started this presentation, is about value aligned investing and making sure that you guys have operational clarity. Fasi, I'd also like for you to introduce yourself, please.
Yep. Quickly, I am one of the managing partners here at the Fajr Fund. Professionally, I've been working in the engineering space and in sales space for the past 10 years, helping companies, grow their footprint here in the Metro Detroit area. I wanted to introduce myself and go into detail, but I think what I want to really say about is that I am the a perfect example of the situation, as basically being a 9 to 5 earner, expecting to income to come in as clockwork, allocating, maximizing our 401ks to match what the employer is providing, so that we make sure that everything is in there when we have to retire, as well as making sure that they're in the public markets, right? So we invest in public markets, not through our retirement accounts. Then also we create Roth IRAs to see to it that we have enough funds after taxes. Again, that's going in the public markets. Then also traditionally with our after tax income, we are investing, and it's all in the public markets. And we hope that this is the best way to do it. This is the safest way to do it, and hopefully that's supposed to be the most safest and halal way to do it. When it came to real estate, I used to think that it's too risky. Obviously, there's so many things involved with tenants, making sure you buy the right property, the timing, and where the property values are going. And really, I was averse to taking mortgages, so it doesn't really make sense to do real estate without taking on debt. And then last part was also about wealth preservation. I was in the impression that there's no real plan in thinking about what our investments are impacting to the world. But by seeing things that are happening in Palestine and Gaza, and what we are seeing in the place and position that we are in and what we're supporting, it's really important to be intentional with our dollar amount and where they're going. And that's where I started doing planning and adjustments. And alhamdulillah, through partnerships, through the network and that Nabil and his team has provided, we've been able to create products that are truly better, halal, tayyib, and essentially making sure every dollar that we spend in investment is truly impacting the world, truly impacting locally the people that we are investing in.
Thank you for that introduction. So we've talked about some of the ethical questions that we want to, take into consideration, but also understanding the math behind your traditional investment portfolio is also important, right? We're not here just to give you our opinions. We're not here to just have you question the way things work, but really understand how the fundamentals are. And this is why the math matters, right? The question that I asked many professionals that I work with, that I've even asked AI, ChatGPT, so on and so forth, is what is a good number for a healthcare professional, business owner, someone who's just a professional in general to actually and comfortably retire with? And the consensus of that answer came out to be right around $3 million a year, or $3 million portfolio, right? If by my age of retirement at 65, I have $3 million in stocks, what normal, economy and financial advisors will tell you is that, hey, $3 million is a very healthy amount. And the issue is not whether that $3 million is impressive, because really it is. The issue is whether by reaching that $3 million, you have the income you want, the flexibility, and peace of mind that many professionals expect, right? And when you reach this retirement age and you've built a $3 million portfolio, most financial advisors will say, Mr. Fasi, Mrs. Sarai, you've built this portfolio for you to comfortably live the rest of your days out. You should withdraw around 4% maximum a year. And at a $3 million portfolio withdrawing 4% a year, you're left with about $120,000 gross. That's before taxes, before inflation, before healthcare, before supporting family, and before a whole lot of things. When I really look at that number, that $120,000, that's $10,000 a year. After taxes, you're probably at $7,000 to $8,000. The question that I would ask for a lot of people today, how much are you spending on a monthly basis? And if you fast forward 25 years into the future, do you think at that point in time, $7,000 to $8,000 is enough to truly live the way you are today, to be able to expend and donate and help and be comfortable the way you are today? And I think for most people, that's a very tough realization to understand. And I want that to sink in, guys. And it doesn't mean that there's nothing wrong with doing it still this way. But the question that I ask myself, and that when I'm talking to clients, is that is there something better? All right. So the professional paradox that most people are in is that you can have everything, yet you're still feeling stuck. As an individual, you have great income, you have strong savings, you have a retirement account that's building and looks very healthy, especially on a paper, as a paper number. You're working with top advisors, you even have professional status. Most of us, either in their 30s, you're chasing growth. By 40s, you're probably starting to ask more and more questions. In the 50s, you focus on protecting. And at 60s, when you're actually retiring, you're just hoping and praying that the market stays healthy. And the question that we ask ourselves deep down, or maybe in close circles, why doesn't it feel like freedom yet? And you should rightfully ask that. You have on paper what looks like to be a great life, but then there's these lots of loose ends and questions and confusion that you have when it comes to actually your life planning. And most of these stages that we've talked about are going to happen anyways. The question is, how fast can we get through it? And once we understand, actually proactively preparing and providing a solution. Because for people asking their questions in their 40s and then starting to realize in their 50s, sometimes it's not that it's too late, but it could be that, you know what, if I thought about it just a little bit earlier, it could have made a significant impact. And I want to be one of those small catalysts to get you guys to start asking those questions and really thinking and reshaping the way we do things. Because just because something is normal doesn't make it the best way. All right. I think I'm skipping slides. All right. So, what retirement should feel like shouldn't just be answered by, can I stop working? The better questions here are, can I maintain my lifestyle? Can I create dependable income? Can I continue to help my family? Avoid financial anxiety. I think this is more important than anything. There's a small story I'd like to share, and I just read it. Someone else posted it on LinkedIn, and I was reading it, and I was like, man, you know what? This is crazy. There was a business owner who ended up selling his business for $30 million. Okay. And this business owner at $30 million exit was at a store buying, personal belongings, clothing, shoes, whatever it is. And he was at the register constantly contemplating. And someone asked him why. And he said that even though I've sold my asset and I have $30 million, I don't have any additional income. So the concern becomes, do you run out of confidence before running out of money? And that's exactly the situation he was. Yes, he's made this big exit, but if he spends too much, it doesn't matter how big the exit is. If he still tries to maintain a lifestyle that doesn't align with just a $30 million exit, then unfortunately, he cannot stop working. And that's the reality. You need to be able to stop working while being able to maintain all of these components that we talked about. And then the biggest thing is that this portfolio that we've built, a lot of it, unfortunately, is out of our control. Can it withstand market downturns? And I think that, we've all lived through some, and I'm going to use some examples, later in the conversation, but there are market downturns that we need to take into consideration. So for a traditional portfolio, while you're investing, you don't actually tangibly see any benefit from it. It's only when you get to the point and the time at the stage of retirement where you're now selling your portfolio to benefit from it. The way it looks, you build the portfolio, retirement arrives, and now you're selling to live, slowly dismantling what you've built over the years. And what I like to label it as is a cannibalization problem. And to give you guys like a simple real world example, like even I'm just going to take my parents, gardening in the backyard as an example. Imagine when they're gardening, instead of gardening, hoping that the fruits or the trees that they're planting actually bear fruit that they can use. The whole goal to gardening and planting that tree was, I'm going to plant the tree, and when it gets big and tall, I'm going to cut the wood down and I'm going to sell that wood to survive. That's a lot of work just to get rid of it at the end. The reality is that people are focused on planting and agriculture because not are they expecting to cut the tree, but they're expecting that that tree that they put their hard time, effort, sweat, tears into is going to bear fruit. The real fundamental problem that I personally have with the traditional retirement investing is that it's exactly the opposite of what a tree is meant to function as. So, we've talked about some of the downturns just real briefly. I wanted to get into very specifics. I think every single one of us, we might not have been old enough to really understand for some of these, but we've probably lived through all of these, right? The dot com crash at 2002 to 2000 to 2002, I had no clue what was going on in the world. But still, as I get older, I hear that in conversation and it's referenced, right? I was a little baby at that time, but 49% of portfolios were devastated. That's insane. Just to give you guys an example, that means your $3 million portfolio overnight could unfortunately become worth $1.5 million. Then, more recent times, you've got the financial crisis, which unfortunately it wasn't just stocks, it went from everything to real estate as well. So, some things also have, some other investment vehicles will also have these risks, but the concern should be which one is the riskiest, which one is the most fluctuant, which one is the least steady. And unfortunately, time has told us that stocks are unfortunately subject to a lot of these market shifts. And then just as of recent, I'm pretty sure everyone was at least an adult around this time, in this conversation. But in 2020, we had a significant market crash, and it was 34% in 33 days. Did it bounce back up? Yes, absolutely, it did. But the question you have to ask is, what if you have to delay retirement because of the market? Most physicians and professionals truly quietly carry this fear. And yes, it might go up, but what if I need to take money out today? Again, I want to preface this back to what we spoke about in the beginning. It's not about replacing the traditional way of investing, it's about understanding it and seeing if there's better ways to do things. And I think there is, and we've done it and we've seen it. And real estate is a huge component to that. But not just real estate, even some of the assets that you guys invest in as stocks has different functionalities that people also are buying into that could benefit you. And I'm sure there's more examples, but there are assets that grow and then other assets that can grow and pay you. All right. And I'm going to use Coca Cola as an analogy because it is stock. It is something that I would recommend if you do want to invest in traditional markets, you should take into consideration. But when people invest in Coca Cola, they don't just hope it appreciates. Don't get me wrong, if it appreciates, great. But they also value consistent dividends while continuing to own the shares. So Coca Cola historically yields 2 to 3% annually while investors continue owning shares. So, what does this look like compared to, let's just say, Meta, right? That stock is only valuable if it goes from 50 to $100 and you sell it at $100. Coca Cola, on the other hand, doesn't matter if it stays $50. And I don't know, I don't even think it's there. I have no clue. I'm not a stock guy, so forgive me if I'm throwing all these random numbers out here. But even if Coca Cola stayed the same, Coca Cola would pay you something that goes into your account that can be spendable and utilizable income. Even if it's on $100 invested, you're making $2. That $2 could be, the drink you buy at the gas station. But I think for a lot of us, that is more important than having something that grows on a screen or technically is growing on paper that I can't benefit out of, right? And another way that we all should take into consideration is shifting our investment mentality to not just being in stocks, but also real estate income. With real estate, there's multiple benefits, right? And really four things that we can rely on, not just the appreciation of it, right? The goal is not appreciation, but four things, which is one, ownership. And then we've got cash flow. We've highlighted that. And it's because cash flow is really what I think is the most important thing of all. I wouldn't care if my portfolio grew in value as long as I had enough money coming in that could pay me to live the lifestyle I wanted today. And that's a personal preference, to each their own. But I think a lot of you guys who are in this webinar and you guys have joined, it's because you are starting to ask questions and really think about the way things work, right? Then also tax efficiency. I've heard this from many of my physician friends and people who have invested with me. Nabil, I make $300,000, but after everything, I make only 180, 200,000. I'm paying a significant amount as a W-2 earner. This is bleeding me out. It sucks. And a lot of them are like, man, it doesn't even make sense for me to work overtime. I'm losing time, sleep, energy, and I'm only getting a piece of what I worked for. So creating tax efficiency is also very important, which we do have these webinars. Like last week, we did one, how a W-2 earner can, basically be tax efficient. But in short, because this is not the goal of today's conversation, we'll still just mention that real estate is a vehicle that can get you there, where it will help deduct a lot of these, costs that you guys are paying. And then still with real estate, historically, it is the safest vehicle for long-term growth. And you'll ask a lot of the people around you who are comfortable, and it's primarily because they have some cash flowing assets, and 9 out of 10 times it's going to be through real estate. So the question I ask myself is, why would I not at least put a portion of what I'm investing in a vehicle that can give me four ways to benefit versus one? And in a great market, your stocks will appreciate definitely probably a lot faster than your real estate. So each has its pros and cons, but for a lot of people, safety is more important than the potential of doing great and also risking that it might not do so great. So there are traditional growth assets that we've talked about. They appreciate over time. There is the benefit also of high liquidity. You can sell anytime. Sometimes you also get stocks that have dividends. And then the biggest concern is for most stocks is that requiring to sell it to generate income. And then they're vulnerable to sequence of returns risk, meaning when things happen, it affects stocks directly. So real estate, the pros and cons, we've talked about a little of it. There is appreciation and ongoing cash flow. You can get monthly, quarterly, yearly income. There is potential to have 8% plus even in distributions, tax efficiency, and you can own the asset. Now, we didn't mention on the screen the risks, but on the left side, you can see it says high liquidity, sell anytime. One of the quote unquote cons to real estate is that it's not as liquid, meaning that you can't just liquidate your property or your shares in a portfolio that's a private equity overnight. It takes time, but just like anything that takes time, it has durability. Just like, you can't sell it overnight, it also can't suddenly go down in value overnight. All right. So Fasi, if you don't mind, I'd love for you to jump in and take it from here.
Yeah, so most of us, as professionals, like I said, are primarily invested in the public markets. That's I would say almost 100% of our investments are in, including 401ks, which are usually based out of that, IRAs, ETFs, index funds. We don't really have alternatives. And the reason is because we're not taught about it. There's not much education behind it. And it's basically kept for private markets, which is usually where people are making more sophisticated money. So the questions we want to ask as we are becoming, let's say, high earners, is like, how do I create dependable income? Because at the end of the day, you want freedom from your W-2. You want to make sure you have some assets that are producing income, and you don't want to get your hands dirty by doing all the work, but you want to make sure that there's dependable income coming in. How do I reduce volatility stress? Uh, I mean, we are completely in the public markets, and there is someone sitting on a keyboard typing up that I'm going to do something, I'm not going to do something, and the markets are shifting. It doesn't make sense. Like, why should my money be affected on somebody just putting something on social truth, whether it's truth or not? How do I improve tax efficiency? A lot of us say that, yeah, we are in a bull market, we made some money, and then let's say capital gains time come in, and you're realizing some of these assets. What we see is that we are taxed at the highest tax brackets. Short-term gains, long-term gains, either way. So you do have, even though opportunities to pull out money, but you're taxed on it. So really, we need to think about, wait, how do I make sure that when I pull out this money, I'm not taxed on it? And the way you could do that is through a proper allocation into private placements, such as in real estate, that give you significant tax benefits. And then how do I avoid selling in a downturn? A lot of people do panic selling, and that's what rates leads to. And Nabil mentioned about the liquidity aspect. I want to say liquidity is, even though sometimes considered good, I would say it's actually not good, because liquidity creates fear. And when fear comes into being, then you immediately sell, even though you don't know what's going to happen tomorrow. So this is the question that we want to ask everybody, and to see to it that how we can diversify beyond the traditional public markets, as we all see. And I think some of us, if they're reading the news, they see how SpaceX is crashing, let's say that, and everybody knows that these IPOs are going to happen, and at some point in time, people that are holding it will basically sell those stocks and realize them, and the markets will crash again. So again, it's all dependent, and people are seeing it in the open. Yet the reason they're not diversifying is because we don't have other options.
Yes. So, like Fasi is saying, these are very good questions for us to ask. And bottom line is that what we want to do is give you guys options and knowledge for you to take back and think on, right? This is what's important. And what we're going to show you next is where most professionals start and where they're headed, right? A more evolved portfolio, in our humble opinion, and again, this is only for illustrative purposes only. Please don't screenshot this or take it and say, hey, this is exactly what I'm going to follow. We are not financial advisors. I am a real estate expert. I've done my own finances and things like that. But there are financial advisors that you can contact, and we will recommend some. But a lot of people nowadays, what they're doing is shifting from having 90 to 100% in public markets to really having 40 to 50%. You put some in real estate, 25, 35%, then maybe 10 to 15% in private alternatives. And then always, of course, you want to keep some cash and liquidity. So this is what probably the new wave of financial advice will start to look like, especially as private options start to become more and more accessible for high net worth individuals and people with ethical standards as well. A lot of private markets in the past did not have options. Stocks seemed a lot more halal than investing in a fund that has a very black and white mortgage, or doing things that we don't accept. Maybe they're opening a franchise of haram restaurants or whatever the case may be, right? So now, as today, we see, and even in this call, we have another fund manager who is focused on doing things in an ethical way. So we're very proud and happy to see that. All right. So this is a slide, Fasi, if you want to quickly just go over this.
Yeah, so it's basically reiterating the points that we just mentioned earlier. The whole point is to get into a cash flow state. Economics, when you go to basics of economics 101, what is the ability of a person to have goods and services that help him in his day-to-day is what is called as a cash flow, or being able to afford things, not on paper. So when we go back to the basics, really, when you have your portfolio growth, you want to see that affecting in your day-to-day life, in improving your day-to-day life, and it doesn't happen even though you could be paper rich. And so we what we want to focus is on the cash flow engineering aspect, is how can we have more distributions coming in regardless what of the market conditions are, so that when I am at home, I'm at peace, knowing that I am going to get some portion of it that's coming to my bank account, and I can use it without having to fear where my portfolio is going to go. Diversification, like Nabil just mentioned, not having the dependency on just one type of asset class and being able to diversify it is very important. We talked about cash tax awareness, how essentially investing in real estate, specifically funds, can offset your passive income and passive growth in your capital gains in public markets, and how you can offset that out. Retirement income planning. Again, these are all questions that we need to ask and take home. I do think, I don't think we mentioned it earlier, but we do have booklets that we give out to our webinar attendees that will allow you to essentially plan these out. These are like some questions and tax strategies that you can implement so that you can take something back from these webinars. Behavioral risk management, again, being able to not make decisions based on something that's happening globally, that's very important. Something happens in Africa, and next thing you know, you're adjusting your portfolio. That shouldn't be the case. You are a local person somewhere living in North America or in a local place. Your livelihood and your basis of what you're trying to do should not change about because of something that happens in some strait. The sequence of returns, the order in which you make your returns is also very important. These are some things that you want to also discuss it with a financial advisor. In fact, some of these slides are taken from a financial advisor that we work with, Eldin Foucault, and you'll see his company name at the bottom there that says Sterling Advisory Group. He is a financial advisor and planner, and he helps people diversify their portfolios and also make sure not only keeping it Sharia compliant, but really making sure that it is aligned with what you want to see your money doing for the betterment of the world. So it's very important to take into consideration and finding such people who have a like-minded attitude towards financial management.
And one thing I'd like to mention here is that this individual, and there are other people who are, similar mentality, but unfortunately for most of us, the financial advisor that we're working with will never tell you to move any money out of the public markets. And the question should be answered, or the question we should ask them is why. You'll get usually different reasons, but bottom line is that unfortunately their income is based on how much they have under management, right? So I'm not saying that to bring anyone down or recommend or disregard, but it's important for us to know actually how some of the mechanics work in the background and the potential benefits or reasons they answer in the way that they answer. So again, this individual that we spoke to, I spoke to him myself about some of my own concerns, and he gave me good, genuine advice. And there are many other people out there as well. This is just someone that we know locally. But I would say when you're getting advice, ask them straightforward, hey, how do you earn and how do you get paid as well? I think that's something to take into consideration. All right, guys. Some of this stuff is repeated, but it's important that we truly go into it and give you guys, the simple answer and, kind of hammer in on some of the key points. We are not talking about abandoning traditional investments. It's about building a halal structure that feels a lot more resilient, more income oriented, diversified, and intentional. You'll hear the word diversified multiple times in this presentation and pretty much all the presentations that we do, because at the end of the day, you should never have all eggs in one basket, right? The goal isn't just to have more money, it's to have options, be calm, structure, income, so on and so forth. And the bottom line is that we all work too hard to build wealth that feels very fragile. And sometimes I feel on the opposite end, right? Stocks have its place. Sometimes I'll hear in my friends circle, man, I invested in this stock and it went so high, and it's actually a Sharia compliant stock, right? So sometimes I'm so invested in real estate I miss out, and I'm also trying to find that balance and being able to have a little bit more flexibility and diversification in what I do. So some of us are completely in one way, some of us are completely in the other. And yesterday when I was listening to a khutbah, it was talking about how Islam works and how we as Muslims should think. And there's a hadith that says, as Muslims, we're people who should be in the middle. Okay, not all the way to the left where we're extremists, and not all the way to the right where we're completely modernized. Right in the middle is always probably your best bet, and we take the good and bad from both sides and we come to our own conclusions. So each one of us are individually different, we have individual situations, but having diversification and being in the middle is the way of the sunnah. So, point of wealth that we need to ask, what is the point of wealth if it also creates no visible impact? When we are at the end of our lives and we're sitting around with our family, inshallah, we will be given children and grandchildren who will ask not just how much money we made, but what did your money build? Who did it shelter? What communities did it improve? What values did it reinforce? And these are really all things that can be answered in a positive way while actually building wealth. It's not that, because I want to have impact or because I want to improve a community, I can't make money. No, that's actually completely wrong. There is a way to have all of these boxes checked with your investment dollars. And we have our approach, and we've been recommending real estate, and there's a few ways to do it. You can be your own landlord, where you can invest and buy some yourself, which in that illustration, we did show a portion of it should go to investments like that. But there is some cons to it that a lot of us don't want to deal with, like tenant calls, surprise repairs, operational headaches, liability, time consumption. This is the most important thing, especially even as I get older. It's not about how much more money can I make, but how much money can I make efficiently. As I start thinking about my family, my parents, my future kids, so on and so forth, time is really the most valuable commodity that we have. And then concentration risk. When you invest in one real estate asset, let's just say you bought a property for $250,000 cash, all that $250,000 is in that one property. Versus the way we operate and our approach to it is to help investors reduce operational burden by having investments diversified across properties. We have professional management. There is what we call truly passive income. You invest and you don't have to have time involved. And that's another word that a lot of us do get mistaken. What is the definition of passive? The definition of passive is that you invest and don't have to look back or get involved in. Real estate is always recommended when you invest yourself, or it's marketed as a passive income. And for the most part, it's pretty close to being true. But if I have to put even a little bit of time, it negates that definition. And our approach offers quarterly distributions as well as, alhamdulillah, value aligned investing. So we want to talk oh, there we go. So we want to talk a little bit about a market opportunity that we see here in Detroit today. Detroit is a city that has 650,000 people, which once had 2 million people living in it. We're 140 square miles wide here locally. The average rents are 1,074, and the median price is about $90,000. We see this and we mention this here as a significant opportunity. One, because the metrics show it, and second, because this is where we're boots on the ground and we're actually making things happen in the returns that ideally our investors want, with being ethical, with being a difference, and so on and so forth. All right. So if you guys want to know more about Detroit and either investing directly through us, or if you want to invest yourself, please do reach out. Feel free to call me or Fasi. We're going to share our information, and we will definitely be able to recommend opportunities and ways to access this type of market while keeping it passive for you. All right. And There's a question that a lot of people ask: can you do it on your own? Absolutely, there is a way you can do it on your own, but what risks does that come with? And really, what are you actually benefiting more compared to partnering with people like ourselves? Those are questions that I would like for you guys to all ask. Where we can help you guys, right? We've talked about many problems here today with Fajr Income Fund and my expertise as well as Fasi's. We can help evaluate your portfolio, create income producing assets, help with tax efficiency, and creating value aligned investing. This is truly where we can help and benefit you guys. And hopefully through this conversation and some of our introduction, you guys have some confidence in our ability to assist you guys, right? So again, just to reiterate, finding you the right assets, that's something we can do, providing you resources for proper tax planning, and then helping you purchase, maintain, manage, rent, sell the asset, all of that. And then what we're working on now, which is our completely passive income model, is providing debt-free options. So what our company looks like, I'm going to quickly just go over some of the components that we have. Alhamdulillah, Amin Realty is the brokerage that I own locally here in Metro Detroit with 10 years operating experience, $1 billion in transaction, and about 100 agents that work for us. Why this company is crucial to our infrastructure: it provides deal flow, seller access, market intelligence across Metro Detroit. Then we've built the sister company. This is where Fasi and I are partnered as well, beyond just the Fajr Income Fund, where we do leasing, collections of rent, maintenance, rehabs, you name it. Everything basically from getting it acquired to all the way making it actually profitable. And then the Fajr Income Fund, which is the 506C model that we're working on for accredited investors, where we not only just help you manage the asset, buy the asset, but we're actually helping you with capital allocation, the reporting, and truly, truly making it a hands-free system. So connect with us. Here is our information. Feel free to reach out to Fasi at thefajrfund.com. You can also see his number there, 313-782-2395. And then also we've got our website, thefajrfund.com/contact to reach out. Then you can also just go on the website and book a call as well. So this is some questions, but we also this is one last question we want to leave off with. We want to continue doing these sessions, and we truly want to make it valuable for you guys. We've put some suggestions up here, but it could be about anything related to real estate or investing in general. We do have many guest speakers that we can also bring that are expertised in different fields, but some potential topics for you guys to ask us about. Feel free to put something else, but if you want to talk about passive loss planning, 1031 exchange, cost segregation, real estate professional status, private fund diligence, feel free to put a letter in the message box about what you would like to see next. If none of these apply, just feel free to mention anything that you guys would love another session on.
Nabil, I think we didn't take any questions along through the presentation, and I think we did a better job of wrapping this up in time.
Yes.
So we do want to open up the floor for people to ask questions. Feel free to put them in the chat box, or feel free to unmute yourself. And if there is any topic or point that you want us to go back in the slide deck, we can definitely do that.
Absolutely. And I did that so we can open up some questions.
Okay.
All right. Someone replied, private fund due diligence. We will absolutely do a session on that. And actually, we will send an email out with some of the booklets that we've made and, basically documents that we use ourselves, but we have a checklist to evaluate private funds as well. Fasi, if you want to add anything to that.
Yeah, so once we are done with the presentation and the people who have attended today, it's basically a bonus that we provide for people taking the time out. And it's basically a fund due diligence checklist. So it walks you through what the questions you need to ask, what operators need to be doing, and essentially walks you through the steps and process of doing a due diligence on any private placements or a 506C fund that you want to invest in. So we will be happy to provide that out to you.
Sure.
The I think the question was, okay, Omega Smith. Do mention your email. I don't know if you have registered on Luma, because it's important that you register on Luma to receive it. If you don't have your emails, we won't be able to send it to you.
I had a question, if you don't mind, if there's
But
time.
Absolutely.
Jazakallah for the presentation. It's very good. One of the things you mentioned, I think most people are invested in stocks, 401k and whatnot, is the ease of access. So, for example, 10% of your paycheck, 5%, whatever, you can do that on a rolling basis and almost set it and forget it. In this particular thing, I know the cost of entry is higher, but it's more safer, as you mentioned. Uh, and as you mentioned, I mean, people can afford what they can afford to put into it. So the more, the better, obviously. But would you say there's like let's say for moderately high income, is there a particular number that you would encourage somebody to work towards? Maybe if they work harder early, so they can put in more early to capture this. Is there a particular number, like for example, 50,000 a year, ideally, or 100,000 a year, whatever it may be? Is there like so people can have like an idea of okay, how much yearly should I put into something like this, whether doing real estate on your own or through the Fajr Fund income?
So, Dr. Afaq, I think that question is individualized to each person. There's the question of how much do you actually want as a sustainable income to live off of, and based on that, either you become very aggressive or you can do it, passively, or a certain percentage allocation. And then two, how much can you actually set aside to invest? But I would say, as a simple math, let's just say if I am in my 30s, let's say I'm 30 years old and I want to retire by 65. I've got 35 years. As an example, I'm going to make 8% on my investment. At minimum, for us in 35 years, if we are trying to target, let's just say, a $200,000 passive income goal, I need to divide $200,000 by the 35 years that I have. So whatever I'm doing needs to equate to about $5,714 in income that can be passive and reliable per year to reach this $200,000 goal. If I'm investing in products that are on average offering about 8% cash flow, what I need to do is determine what number at 8% return gets me to $5,700. And I'm going to quickly just do the math on that. Give me 30 seconds just so we can give a scenario example for us to kind of weigh out this question for ourselves individually. I think it's going to be around 60, 70K, but again, I just want to maybe about 75. You need $71,250 invested at an 8% return per year to have confidently a $200,000 yearly return, basically over the next 35 years. So that's the number, about $70,000.
That example.
And again, that question is answered different for every individual depending on what your situation is. Brother Laikat, you mentioned a session on cost segregation. We will absolutely be doing that. Liberty Dearborn, once signed up with this project in Detroit, what is the process and exit strategy if life happens? Very good question. So this investment vehicle is a 5-year vehicle that we're offering, which is the Fajr Income Fund. There is going to be basically a limit to how many people can exit at the end of each year. I'm going to give an example. Let's just say $10 million is the total investment fund. We can probably have up to 500K, maybe at maximum 10%, which is $1 million, of people who can exit by selling their shares to someone else. So let's just say you have someone that would buy your shares out. That's an option. Or if we have additional investor, if neither of those two apply and we've reached our 10% or 5% per year exit allocation, you'd have to unfortunately wait for the following year. So it's not nearly as liquid as stocks, but there is some exit opportunities that we're working into it. Brother Mohammed talked about passive loss planning. Inshallah, I'm glad that you guys are mentioning different things because every one of us has different needs. Any other questions, ladies and gentlemen? We've got another 5 to 10 minutes. And I see a good amount of people have joined that may not have RSVP'd through Luma. No worries. Just make sure you guys reach out with your email. Some of you guys might be already in our database, which is how you got in. If so, you should be good, but still send us a follow-up. We'll also look back at the recording to see who's attended so we can get you guys all of these handbooks and booklets. So minimum start investment is $50,000. That is the minimum. And we will have openings every quarter. So some people can start with 50,000 and add later, but that is the minimum investment. Someone is asking for the Luma link again, Brother Fasi, if you don't mind dropping that in the group chat. There we go. Any other questions, ladies and gentlemen? So is there any installment plan for investing? Unfortunately, not. Because we are SEC regulated, we have to have official open and closes. So the minimum is $50,000. Some of us who are accredited investors, what you can do is maybe pool with another accredited investor, or something along that line. As well as it's very important for us to mention that cash is not the only way to invest. Many of our existing investors have been investing through their IRA, which is why we started talking about portfolio and retirements. For people that have money that can be moved to an IRA, this is a very simple solution, and we can walk you through that. We're partnered with American IRA at the moment, and we're partnering with additional custodians to make this process easier for you guys, like Fidelity, and I think there's another one called Madison that we're looking into. So we're trying to streamline it. Dr. Afak, I think, so no, it's not a minimum $50,000 every quarter. Basically, the way it's structured, we are starting with a $10 million raise that has $2.5 million tranches. And the reason why we're doing that is just because we received $10 million doesn't mean that we can immediately deploy it in an efficient way that gets our investors the safety and the returns that they're targeting. So we're only raising $2.5 million at a time. And that's why there's those different quarters. You can invest in the first quarter and just end at that. Or if you want to continue and you like what you see and it's going well, feel free to continue to invest with us, no problem. Any other question? All right. So I want to again thank you guys all for joining. We appreciate, sharing the knowledge that Allah has gifted us with, and I highly respect those who go out of their way to actually learn and understand new things. Some of us were always so stuck in our comfort zone that we don't even question or explore what's out there, but there are lots of opportunities. Inshallah, we plan to continue to do this. I would highly recommend, and we would appreciate you guys inviting others as well. So during the next session, we're going to send you guys emails. Please recommend it to at least one family or friend that would enjoy or take value in these sessions. We've seen over the last few sessions that we've done, we had about 20 people in this session at a time, people leaving and going, maybe 25 to 30 people total. Me and Fasi have done sessions where it was just 2 or 3 people. So we are seeing the community grow. I'm looking forward to crossing the line where we can have 100 people here asking questions, engaging and benefiting, and also adding value. We love the questions, but a lot of you guys have knowledge in certain things that we don't know. The goal is to really and truly create a community. And you'll see, even we had a sister named Sarai who joined. She's also doing her own investment fund that we support, and she supports us because this mission that we have, it's not small. There's no way one person can do this on their own or one company. Our goal is to truly explore and elevate the way Muslims invest and create new opportunities. So for you guys to be a part of that, either as an investor or just a supporter, please show up, help, and at minimum, give us your prayers. Jazakallahu khairan. Thank you guys all for your time again. Assalamu alaikum.
Thank you very much, guys. Assalamu alaikum.